Chesapeake Energy CHK on the Russell 2000 valuation metrics dated July 27, 2024 by Dwayne Gray. Valuation metrics: gross profit margin, revenue, net income, subtract cost of sales, operating expense, divided by revenue, net income, comes to 1.2989. This ratio is especially useful in industries such as food and products and cosmetics, where both the turnover rate and competition levels are high. The gross margin is an indication of the efficiency of management in turning over the company's goods at a profit. In other words, it shows the company's rate of profit after allowing for all the cost of sales. This is also useful in calculating internal trend lines for making comparisons with other companies for entry points at resistance and support levels. Valuation metrics: net profit margin, profit, share of profit associates or equity in earnings of unconsolidated affiliates divided by revenue net income. In 2023 was 52.71, in 2022 was 15.73. This calculation shows how much of the money the company collected as revenue remains as its profit. So this shows that 52.71 of the percent of the revenue is retained as profit. This is quite much, as the profit is being retained that can be distributed to shareholders and for the operations of the corporation, etc., mergers and acquisitions, and paying down on debt. Valuation metrics: return on common equity, profit divided by equity, 23 cents. This calculation shows Chesapeake Energy earned 23 cents for each dollar invested. This trend is in the return of common equity indicates management's effectiveness in maintaining or increasing profitability in relation to the common equities capital of the company. A declining trend suggests that operating efficiency is waning. Further quantitative easing analysis is needed to pinpoint the causes. For shareholders, the declining ratio shows that their investment is being used less productively. This ratio is very important for common shareholders because it reflects the profitability of the capital in their business, showing investors how much money they received on their investment. Valuation metrics: inventory turnover ratio, 6.812 to 1, or 54 days. The calculation shows Chesapeake Energy turned over its inventory 43.8881 times over a span of a year, or every 8 days. Valuation ratios: earnings per share, profits, weighted average number of common shares outstanding. $18.21 approximately in 2023. 2022, $39.24. This ratio is an important element of judging an appropriate market price for buying and selling common shares. A rising trend in earnings per share is favorable implication for the price of the stock. In practice, a common stock market price reflects the anticipated trend in earnings per share for the next 12 to 24 months, rather than the current earnings per share. Thus, it is an common practice for estimating earnings per share for the next year or two. An accurate estimate for long periods are difficult because many variables equate capital gains from fundamental analysis of mispricings of stock equity. Chesapeake Energy Inc. price to earnings ratio, PE, market price divided by basic divided by diluted. In 2023, basic $4.54, diluted $4.85, 89 cents. 2022, basic $2.14, $2.48 diluted. Two types of elements determine the quality of an issue and are therefore represented in the PE ratio. Tangible elements contained in the financial data will be expressed in ratios relating to liquidity, earnings trends, profitability, dividend payout, and financial strength. Intangible elements such as quality of management, nature of prospects for the industry in which the issuing company operates, its competitive positions, and its individual prospects. In the Chesapeake Energy example, we calculate the price to earning ratio on the earnings of the company's latest fiscal year. In practice, however, we make investment analysts on firms make their own projections on the company's earnings for the next 12 months period. These they then they calculate PE ratios on these projected features in relation to the stock current market price. Because the many variables involved in the forecasting earnings, you should use estimates in calculations with great caution. The PE ratio helps analysts determine reasonable value for the common stock at any time in a market cycle. By calculating the company's PE ratio over the number of years, you will find considerable fluctuations with high and low points. In the high and lows of a particular stock, PE ratio remains constant over several stock market cycles. They're indicating selling and buying points for the stock. The study of P/E ratios and competitor companies that are on a relevant market subgroup index also provide a perspective. The P/E ratio comparison assists with the selection process. For example, if two companies of equal stature in the same industry both have similar prospects but different PE ratio, the company with the lower PE ratio is usually the better buy. As a rule, PE ratios increase when a rising stock market with rising earnings. Earnings that increase over time are a favorable sign. The company's stock price should also rise over time. Investors seeing rising earnings as a positive development and are willing to pay a higher price for the stock. The increase in the stock price is usually pay a higher price for the stock. The increase in stock price usually is greater than increase in earnings. Therefore, PE ratios increases. The reverse is true in a declining market when earnings decline. Example, at the start of a bull market, the PE ratio of DEF Corporation was 10 to 1 based on the stock trading at $10 per share and the earnings per share of $1. As the bull market continued, DEF Corp reported a higher earnings per share of 250 for the next quarter earnings report. Investors' confidence drove the price of DEF Corporate higher to $43 per share, resulting in a P ratio of 17.2 to 1. Generally, it is assumed that when investors' confidence is high, P ratios are also high. And when confidence is low, P ratios are low. Because the P ratio is an indicator of investor confidence in its high and lows may vary from market cycle to market cycle. Much depends on changes in investors' enthusiasm for the company and investors of or enthusiasm for a company or an industry or several years over several years. The PE ratio of individual stock are also affected by many factors specific to individual companies such as comparative growth rates, earning quality, and risks due to leverage and stock liquidity. Valuation metrics: book value per share (BVPS), shareholder equity divided by shareholder shares outstanding, basic diluted, 8077 basic, 7504 diluted. 2024, 7280 7254 basic, 6254 diluted. So the book value is a valuation that helps investors, financial advisors, and investment professionals to gauge how to determine the price to book ratio in their valuation and stock equity in theory. Book value per share is the sum of the shareholders would receive in the event that the firm was liquidated, all the tangible assets were sold, and all the liabilities were paid. This also gauges intrinsic value of to implement whether stock equity is over or undervalued. With respect to the price of the valuation measure would ensure that you could gauge mispricing and take advantage of it. Price to book. Stock price divided by book value per share. 82.19 divided by 80.77 basic, or 75.04 diluted, equals $1.01 or $1.10. So that's the price to book. The price to book ratio measures the market valuation of the company's relation to its book value. The market value of equity is typically higher than the book value of the company's stock. This price to book ratio usually is used to value investors to identify potential investments. Price to cash flow. Operating cash flow divided by shares outstanding. 2023. Basic 17.92, diluted 16.65. 2022. Basic 32.79, diluted 28.26. The price to cash flow is a ratio of stock valuation indicator or multiple that measures the value of the stock's price relative to its operating cash flow per share. The ratio usually is used operating cash flow uses operating cash flow when adding back the non-cash expenses such as depreciation and amortization of net income. Valuation metrics. Price to cash flow. $82.19, June 29, 2024 stock price of CHK, divided by 16.65 basic and 17.92 diluted, equals 495, no, 494 basic and 459 diluted. The price to cash flow ratio is a stock valuation indicator or multiple that measures the value of a stock's price relative to its operating cash flow per share. This ratio uses operating cash flow and adds back non-cash expenses such as depreciation and amortization to net income. Price to cash flow is especially useful when valuing stocks that have a positive cash flow but are not profitable because of large non-cash charges. Return on assets. Net income divided by total assets. 2023, 16.83%. 2022, 31.91%. The term return on assets refers to the financial ratio that indicates how profitable a company is in relation to its total assets. Companies' assets are generating revenue. Current stock price, equity price June 29, 2024 at $82.19. Price to book times earnings per share, basic diluted, 18.39 cents, 20.3 cents diluted, 2023. Price to earnings times earnings per share, basic diluted, 2023, 2022, 83.98 basic, 97.32 diluted, which the valuation suggests the stock is undervalued and a buying opportunity to cancel out mispricing. Price to cash flow times earnings per share, basic diluted 2023, 83.58, 89.96, which is the valuation suggests stock is undervalued and a buying opportunity to cancel out mispricing. Valuation metrics, capital structure, debt, 3.63 $3,647,000,000, 25% to equity, $10,729,000,000, 75% for a grand total of 100%. Growth at approximately 2% per year based on 2021 and 2022 revenues.